Bonjour, good morning. Bienvenue à l'Amphithéâtre national de la presse. Nous avons avec nous, évidemment, le gouverneur de la Banque du Canada, M. Mark Carney, ainsi que le sous-gouverneur, M. Tiff Macklem. They will make a short presentation of about 5 minutes, and then I'll take questions from the floor. Please turn off your cell phones and all the gadgets. S'il vous plaît, fermez vos téléphones cellulaires. M. Carney.
Merci, Hélène. Bonjour tout le monde. Tiff and I are very pleased to be here with you this morning to discuss our April monetary policy report, which the bank published this morning. In it, we note that the profile for global economic growth has improved since the bank released its January report. Europe is expected to emerge slowly from recession in the second half of this year, although the risks around this outlook remain high. Le profil de croissance de l'économie américaine est légèrement plus solide. Cela est dû à l'équilibre entre, d'une part, une certaine amélioration du marché du travail, des conditions financières et de la confiance, et d'autre part, l'assainissement budgétaire qui s'amorce ainsi que la réduction en cours du levier d'endettement des ménages. On s'attend à ce que, durant la période de projection, l'activité dans les économies émergentes ralentisse mais demeure robuste, étant alimentée par un assouplissement des politiques macroéconomiques. Commodity prices are expected to remain elevated owing to improved global economic prospects, supply disruptions, and geopolitical risks. In particular, the international price of oil has risen further and is now considerably higher than that received by Canadian producers. If sustained, these oil price developments could dampen the improvement in economic momentum. Overall economic momentum in Canada is slightly firmer than the bank had expected in January. The external headwinds facing Canada have abated somewhat, with the U.S. recovery more resilient and financial conditions more supportive than previously anticipated. As a result, business and household confidence are improving faster than forecast. The bank projects that private domestic demand will account for almost all of Canada's economic growth over the projection horizon. Household spending is expected to remain high relative to GDP as households add to their debt burden, which remains the single biggest domestic risk. Business investment is projected to remain robust, reflecting solid balance sheets, very favorable credit conditions, continuing strong terms of trade, and heightened competitive pressures. The contribution of government spending to growth is expected to be quite modest over the projection horizon, in line with recent federal and provincial budgets. The recovery in net exports is likely to remain weak in light of modest external demand and ongoing competitiveness challenges, including the persistent strength of the Canadian dollar. The bank projects that the economy will grow by 2.4% in both 2012 and 2013, before moderating to 2.2% in 2014. The degree of economic slack has been somewhat smaller than anticipated, and the economy is now expected to return to full capacity in the first half of 2013. As a result of this reduced slack and higher gasoline prices, the profile for inflation is expected to be somewhat firmer. After moderating this quarter, both total and core inflation are expected to be around 2% over the balance of the projection horizon. As the economy reaches its production potential, the growth of labor compensation remains moderate, and inflation expectations remain well anchored. Malgré l'amélioration récente des perspectives relatives aux économies mondiales et canadiennes, les risques en matière d'inflation au Canada demeurent élevés. Les trois principaux risques à la hausse ont trait à la possibilité que les prix de pétrole soient plus élevés qu'attendus, la croissance de l'économie américaine soit plus vigoureuse que prévu et les dépenses des ménages canadiens affichent un dynamisme accru. Les deux principaux risques à la baisse sont liés à une nouvelle intensification des inquiétudes concernant la dette souveraine et le secteur bancaire en Europe et la possibilité que la croissance des dépenses des ménages canadiens soit plus faible que prévu. Dans l'ensemble, la Banque estime que les risques qui pèsent sur les perspectives d'évolution de l'inflation au Canada sont relativement équilibrés au cours de la période de projection. Reflecting all of these factors, the bank yesterday maintained the target for the overnight rate at 1%. In light of the reduced slack in the economy and firmer underlying inflation, some modest withdrawal of the present considerable monetary policy stimulus may become appropriate, consistent with achieving the 2% inflation target over the medium term. The timing and degree of any such withdrawal will be weighed carefully against domestic and global economic developments. And with that, Tiff and I would be very pleased to take your questions.
Okay, thank you very much. I first have Louise Agan from Reuters.
Hi, I was wondering, how much did your concern about high household debt and heated housing market play into the bank statement yesterday that higher interest rates may actually be needed eventually?
Well, I would draw your attention first to the underlying dynamics, first and foremost, to the underlying dynamics affecting activity and inflation in Canada. As I just mentioned, and as we detail in the report, activity in Canada has been a bit stronger, a bit firmer than we had anticipated. We're using up that excess capacity a little more rapidly than we previously had thought. Excess supply in the judgment of the Governing Council in the Canadian economy is about 0.5% now, so it's relatively modest. Inflation is consistent with the target of the bank. Underlying inflationary pressures are a little firmer. And it's in that context that we in all of those contexts that we observe that it may become appropriate to withdraw some of the considerable monetary policy stimulus, although that has to be, those decisions will have to, are future decisions, and they would have to be taken in the context of evolving domestic and international developments and obviously the risks that exist in the global economy.
As a follow-up on the debt question, the MPR has a whole section on home equity lines of credit, and you know, it says that the situation is not sustainable, basically in terms of funding consumption to the rate that it has been. What can be done about that?
Well,
is there need for regulation of HELOCs?
I think there's two questions there, if I may, and let me deal with them briefly. One is, what do we mean by non-sustainable? What is not sustainable is the dynamic as more and more households reduce their savings and fund expenditures, consumption and expenditures, for example, on renovations or purchases of other durable goods. They fund those through home equity line of credit. That's a transition. It's the savings rate is lower, and we give an estimation by how much the savings rate is lower than it otherwise would be during this period of transition as more and more people access home equity lines of credit. That process will come to an end. It's hard to predict exactly when, but that process will come to an end. And then we will see the share of consumption relative to income return to more historic levels. So there's a dynamic there. The second point that we're trying to make is to give a little more substance to one of our downside risks, which is to say that there is a possibility that with developments in the housing market, potential developments in the housing market, given the debt load that is on Canadians and the debt load against housing, that there will be a bigger impact on consumption if house prices were to move downwards for a sustained period of time. And so that is a downside risk, obviously, for activity and inflation in Canada. The broader question of what can be done, perhaps since I've used up a lot of time, why don't I leave it to see if anyone else wants to ask that. We have detailed the various lines of defense, which start with individuals, include microprudential, macroprudential measures, and ultimately, in exceptional circumstances, monetary policy. But I think we've been pretty comprehensive on how we view that.
Okay. Next question is from Les Weddington, the Toronto Star.
Oh, hi. Just to follow up on that, to what you're calling the household debt burden the biggest domestic risk, to what extent does the use of home equity as in ATM machines, as some people say, contribute to that? I mean, is that making the risk a lot worse, or is it just a part of that problem, or how should we?
How should we look at it? Yes. Well, like any financial innovation, home equity lines of credit, which have come to the fore over the last decade, have both positives and negatives associated with them. Obviously, home equity lines of credit can be used to refinance relatively expensive credit card debt, for example, at much lower rates. The issue, as with any debt, is if these innovations, or effectively this access to debt, is taken too far in individual circumstances or in aggregate across the Canadian economy. And what we have seen in aggregate across the Canadian economy has been a sharp increase in home equity lines of credit, the usage of home equity lines of credit, some of which have taken place in the context, and this is an observation of the Superintendent of Financial Institutions, in a context of underwriting standards that are less than optimal, less than could be desired, and guidance has been given to financial institutions on that in recent weeks by the Superintendent. And then more broadly, it's part of a bigger picture of driving Canadian household debt levels, as you know, to record levels, and levels that we see over the course of our projection horizon continuing to rise. There are good aspects of it, but it contributes to a broader issue where Canadian households, some Canadian households, are becoming overstretched, and Canadian households as a whole are being overstretched, which creates risk for the economy.
Just quickly, I want to ask you why you highlighted the quote on the need for business to look at the future and investment and whatnot. You highlighted it at the beginning, but in the report it says business investment remains robust, but the chart just shows it tanked in 2010 and has come back to slightly above average levels. So I'm not quite sure why you use the word robust, and why do you? What's the point of highlighting
Well, two things. One, I was concerned less that you didn't read my Waterloo speech, so I wanted to drive you back to make sure that you caught every word of it. The core issue, though, is that, yes, we have competitiveness issues here in Canada. You see the poor relative export performance. Net exports remain weak over the course of the projection horizon. That's in part part of the answer to that is really going to come on the productivity side. It's also going to come on finding new markets, which is the refocus element of those three retool, refocus components, and the two are consistent. The robustness of investment reflects the fact that the contribution to growth is considerable over the course of the projection horizon, 0.9, 0.7, 0.7 over the 3 years of the projection horizon. It's sizable, but there's a lot more to be done, and it needs to be a sustained effort on behalf of business to develop not just new markets but enhance productivity, and that will probably require more rather than less investment. The projection is not what we want to see happen. The projection is what we expect to see happen, and I think the adjective is appropriately selected.
Thank you. Next is Nirmala Menon, Dow Jones.
Governor, the OIS market is now factoring in a bigger possibility of a rate hike this year, and the Canadian dollar has really soared after yesterday's statement. And yet you say that the strength of the dollar is an issue for competitiveness. How do you square both of that, or does that de facto tightening in by the Canadian dollar lessen the need for the bank to act?
Well, we have to we take the level of the Canadian dollar and volatility of the Canadian dollar into account in our projections, and it is one of the factors, and it's a very important factor, but it's one of the factors which obviously influences activity and inflation in Canada, and it's through that lens that we judge the Canadian dollar and take it into account in terms of our decisions. That's the first point. The second is that, and we've been fairly detailed about this in the last few weeks, looking at the challenges that Canadian exporters face. Yes, there are challenges of competitiveness to which the persistent strength of the Canadian dollar has contributed, unquestionably. Our view is that those are best addressed by enhancing productivity, reducing unit labor costs, and finding new markets, because actually the bigger contributor based on our analysis, which I detailed a few weeks ago in Kitchener-Waterloo, the bigger contributor to the relatively poor export performance of Canadian firms has been market structure. To whom we sell, we're locked into slow-growing markets. More than 85% of our exports go to slow-growing economies. Only 8% of our exports are targeted at fast-growing economies. That's not something you can change overnight, but it's something we need a persistent strategy on. And there is an aggressive trade strategy in place that will start to pay dividends. And businesses are also starting to reorient as well, and that needs to continue.
Governor, you're going to the IMF meetings, IMF G20 meetings this week. I'm just wondering, as the IMF tries to boost resources, I'm just wondering, is there a possibility of Canada maybe withholding its pledges to leverage more action in Europe and more IMF reform maybe? Can an agreement be reached this weekend?
Well, first, the decision on whether Canada, the decision on whether a consensus forms in the G20 that the IMF needs at this point additional resource, that decision has not yet been reached. That consensus has not yet been formed. The IMF has a view, but there's not a consensus within the G20 at this stage. Secondly, the decision of any potential Canadian participation, it's a decision of the Government of Canada, so it's a question best directed to the Minister of Finance and the Prime Minister. But I will underscore that, in fact, as the President of the World Bank, I think quite eloquently outlined yesterday in his op-ed, that this is really solving the issues in Europe is not about a firewall, it's about decisions that will be taken in Europe over a sustained period of time. And it's European actions that will be decisive here as opposed to outside money. Finally, I'd underscore that the IMF is there to serve all of its constituent members, not just one continent.
Thank you. Greg Quinn, Bloomberg.
Hello. The report delves into prices of oil that we export and the prices of oil that we import. It seems to indicate that the benefit we're getting from higher oil prices has diminished a bit. If there's that kind of shift going on, should we also be looking differently at how the Canadian dollar has been trading?
Well, that's a question for those who trade the Canadian dollar, but I think it's important that the bank outline clearly the dynamics and the impact of commodity prices on activity. And you're absolutely right. What is relatively unusual right now is that the prices we're paying across the country on average for imports of oil, remembering that in eastern and central Canada, it's the price of Brent is as important as the price of WTI. These prices are much higher than the prices our major producers are perceiving, using WCS as the relevant index there. It's a very large spread. It's come in a bit over the course of the last several trading days, but it's still a very big spread. And net, a higher global price of oil measured by the Brent price, actually these dynamics mean that net it's marginally negative for activity in Canada, and so that's incorporated into our projection. So that's the first point. That's what's actually going on. It is far too simplistic to talk about the Canadian dollar as a commodity currency, let alone a currency that moves on consistent with one commodity, and to trade or to invest in the currency along those lines, ultimately over the medium term is going to be a recipe for losing money. So this is a much more diverse, complex economy and than that, and this is one manifestation of it. And we're not going to give advice on how people should trade in the markets, but it's important to point out the underlying dynamics that are here today.
Could I just ask to hear it from you directly? There's, of course, a newspaper report overnight.
That's a follow-up?
That you've been approached. You've been approached to lead the Bank of England. Is Is it accurate then to say there's been no contact, no communication about you leaving the Bank of Canada to cross the pond?
Yeah, that's accurate. I'm totally focused on my two responsibilities as governor of the bank and as chairman of the FSB, and I can assure you that they add up to more than every waking hour of the day.
Thank you. Julian Miltram, Canadian Press.
Yeah, I wanted to follow up. I'm going to be like Greg, and I have two questions, and they're not going to be related.
Okay.
But following up on that, are you confirming that you have not been approached formally or informally? And can you commit now that you will serve out your term as Bank of Canada governor?
Are those your two questions, or are those the? I can. On the first one, I'll repeat what I said. The reports are not accurate. On the second one, I'm absolutely focused on doing my roles, and the most important of which is as governor of the Bank of Canada. It's a tremendous responsibility. It's an honor to have this position, and I intend to fulfill it.
On oil prices and the differential, can you give us a more accurate or an accurate reading of how much of a net negative it is? You said you've included it in your...
Yeah, it's. I think the important thing here is it's marginal. It's marginally negative. We're talking 0.1 or so off of growth in 2012. It's not clear, and we expect that as we go over the projection horizon, some of these differentials are going to narrow. This is a question of, in part, pipeline infrastructure. It's got something to do with, as well, the way the Brent oil market is trading, given some of the geopolitical risks and the short-term, hopefully short-term supply disruptions currently experienced in the Middle East. So those factors we think will dissipate. So it's marginal, but it's a marginal negative as opposed to a positive. So it's a swing that's material. All of that said, though, taking all of that into account, we expect the Canadian economy to grow above trend this year and next, 2.4% on an annual average basis in both this year and 2013. So we've taken it into account, but the economy has some momentum, in our judgment.
Thank you. Jeremy Torobin, Globe and Mail.
Hi, Governor. On the oil prices and on the gasoline prices, I'm wondering if there's any way to quantify how much higher gasoline prices affect consumer behavior, affect consumption, and for instance, like if you have a price if you have a price in mind at which it becomes too much of a drag.
I'd like the price to be lower. Is that the question? But Tiff will answer that.
Well, there are effects both on real activity and obviously CPI inflation as well. I mean, in terms of real activity, as you suggest, it does have the effect of using up more consumer income if gas prices are higher. So that has a dampening effect on consumption. There's a big literature that looks at whether these effects are linear or non-linear, and I think it's fair to say it's not entirely conclusive, but there is some evidence that when gas prices move up well above where they've been previously, it does have a bigger effect on people than if it's fluctuating within a range that it's fluctuated in historically. And so as gas prices are certainly high, they're not, however, well outside the range that they've been historically over the last several years. So, yes, some dampening effect, but probably not that large.
And just to pull that together, one of our biggest upside risks is actually that oil prices are higher. So the initial impact would, and through broader inflationary pressures globally, is something we look to at the upside. But we have incorporated exactly what Tiff said into the projection.
Okay. The other question I had is, on the IMF resources and Europe, I mean, whatever the final number for the firewall ends up being, right now, do you and however much Canada does or doesn't contribute, right now, do you think the IMF has the resources to do what's necessary to contain the European situation if it flares up again, and also be a lender of last resort to its members?
Well, it depends on the nature of, it depends on how things evolve. The European authorities have considerable resources in place right now. They have considerable commitments of the major economies, affected economies, on the fiscal side, on the structural reform side, and it depends how well those are implemented. These judgments should be taken in the context of, yes, partially preventative, but also in the context of what's likely to happen. And that'll be part of the discussion that we have over the course of the next few days, and I suspect over the course of coming months and potentially years. The situation in Europe will take, it's contained at present, and the Europeans have made important strides in helping to contain that, but it's still the biggest, downside risk, external downside risk to even the Canadian economy, which is relatively detached from Europe. And so, that will likely be the case for some time. So it's not like we will have a discussion in the next few days and then we'll put Europe to one side. I would love that to be the case, but I think we've got to be realistic about it.
Thank you. Michel Lecouteur, Global.
Governor Carney, you had said that household debt is one of the biggest risks. At what point does it become incumbent on you and the Bank of Canada to raise interest rates to whip Canadians back into shape?
Well, I'm not sure I like the image. It's the biggest domestic risk, which we've observed, and that's a risk both on the upside and downside to inflation. In other words, the momentum that in household spending that is being facilitated through things like access to home equity lines of credit, that could persist for longer than we expect and could provide more upside pressure on activity and inflation in Canada, and it's also the downside risk for reasons we talked about earlier. So when monetary policy is not the first line of defense here, it's not the second, it's not the third, it's the last line of defense. It is a relatively blunt instrument. It is a blunt instrument, and so to try to target it into this specific issue is not where one goes first. A number of measures have been taken by authorities, and they include moving up the capital ratios of the banks faster than virtually everyone else in the world. The superintendent's done that. Tightening the mortgage underwriting standards. The superintendent has done that, the HELOC underwriting standards, I should say. 3 separate tightening of mortgage insurance standards that the Government of Canada has taken. And so it's all within that context, and then also within the context of the natural evolution of monetary policy to achieve its principal fundamental goal of 2% CPI inflation over the medium term, all within that context that one makes a judgment on whether anything else would be done on the monetary policy side. And the last thing I'll say is just to reassure what you would expect is that the officials from the superintendent to the Bank of Canada, to the Government of Canada, are cooperating very closely on this issue, constant communication, and we will each, within our own responsibilities, take appropriate actions as needed.
So at what point maybe does it get to be...
That was my answer, by the way.
I'll avoid the whipping thing for the next follow-up. At what point does it become enough of a concern for you? You said it's dangerously high at this point. I mean, then I guess what's your message to Canadians here?
Well, the message to Canadians... Yeah, look, the message to Canadians, I think we've been very consistent, is that individual Canadians, families will take these decisions as they should. If you're borrowing, make sure that you can sustain that borrowing in a world of higher interest rates. Make sure that it's appropriate. And for a number of Canadians, the answer will be they can, and that's great. That's entirely appropriate. But don't be careful about borrowing on the assumption that rates are going to stay low for the lifetime of what you borrowed. That's not a wise a set of assumptions to make. And be very careful about borrowing on the assumption that what you're buying, if you're buying a house or whatever, that its price is going to continue to go up. That you know, again, individuals, Canadians are smart and they're prudent and they can make these and they will make these decisions themselves. But there's a couple of assumptions that should not be made or should not be heavily relied upon in that context.
Thank you. That completes my list. Are there any other questions? No? Oh, no? Okay. Well, thank you.
Did I not answer? I answered your question then. Yeah.
Yes.
Yeah.
Well,
Sure.
do you-
Okay.
do you have
Because
more-
I
do you have
did not
a-
answer.
That's what
the
makes
second.
me live. And I have another one. On the China's recent moves on to widen the band for its currency, I'm just wondering how far does that go in your view to solving the desire for more flexibility?
Well, we take note of the announcement by the People's Bank on this past Friday to widen the band. Yes, it goes some. It creates the possibility of additional flexibility in the currency. So it's a step, but there's. We'd like to see additional flexibility in the currency. There's also a commitment as part of the G20 process of Chinese authorities to slow the pace of reserve accumulation, and we'd like to see progress on that. Not changes in the levels of reserve accumulation because of valuation effects, but actually slowing the pace of reserve accumulation. And both of those factors we will see in the actual market over time. So we take note of it, and we look forward to meeting with them over the course of the next few days and hearing more about what's actually going to happen.
Do you have time for one very last question? I think
Okay.
Nirmala has one as well.
Okay.
Governor, actually, that was my question, but
Great.
actually, I do.
Yeah.
Your MPR talks about the drag, the fiscal drag in the U.S. That seems
Yes.
to be it's that you've upgraded your forecast, but you've made special mention
Yes.
of the effect of the drag. Could you expand?
Yeah,
on-
very quickly. The important thing, and there's a chart in the NPR which shows the actual fiscal drag in the U.S., which is considerable, given what's in legislation right now in the U.S. Chart 9, thank you. You have both the end of the extension of the Bush tax cuts at the start of 2013. You have sequestration, so-called sequestration spending cuts that are locked in at the start of 2013. So there was a big sort of 2.5 percentage point of GDP fiscal drag locked in our judgment, for 2013. Now, the question is whether after the elections, Congress and the President will smooth that and take some of that drag away, whatever decisions they take. There'd be the elected officials to take those. Just looking at the chart, might not be a bad idea to do it. I think it's occurred to American officials, but having an idea and executing it are two different things. That will change, obviously, the profile of U.S. growth, adding some to 2013 and taking some away from 2014 and later years. If they take those decisions, we won't know until after the election into January of next year if they take those decisions, so we'll have to adjust accordingly. But we just wanted to flag it because it's a big factor there. And I think with that, yeah, thank you very much.
Thanks.
Great. It's getting dangerous.
Merci beaucoup.
Merci beaucoup.
Merci beaucoup.
La dernière fois que j'ai vu